And now for the most exciting section, section 3.5, we're going to look at stocks. So your goal by the end of this lesson is to make sure you can just read a stock listing, and then that you can calculate the cost of buying stock, and then how we figure out what the profit and loss are from it, and just kind of get a decent idea of what's going on here. And then I think we're just going to skip the bond sale stuff. So in general, let's make sure we understand what a stock is. So a company can file legal papers, they become a corporation, and then they issue stock. What you do as a purchaser of stock is you buy shares of that stock, and you become an actual owner of the company, albeit probably a tiny portion of that company. So, for example, like if a company issued 1,000 shares of stock and then you buy 250, your share of that company would be 250 out of 1,000 ownership of that company. So that means you're entitled to any gains the company makes. In fact, this is you'd be 25% owner of that company, or 1/4. So there's a couple of different ways to earn money with stocks. One way is some companies will pay what's called a dividend, and that is a portion of the profits the company gives back to their stock owners. Other companies just reinvest that profit right back into their company. So other ways you can issue bonds. This is where you don't actually own the company. You just are agreeing to receive a certain percentage rate of money over a certain period of investment. Like the U.S. government issues lots of bonds. They tend to be 30-year bonds, and you're going to earn, say, 3% interest on that bond over the 30 years. So how do you buy stocks? Well, you have to go through a stockbroker, and until the age of the internet, this was an actual person who was legally able to buy and sell stocks in a particular way. I don't really know exactly how that worked, but nowadays we have online brokerage services like Robinhood or Webull or Charles Schwab and all these other places, and many of these stockbrokers charge a commission, which is a fee, either a percentage of the amount of money you're spending or just a flat fee to buy and sell stocks. So how do we decide what stock we want to buy? Well, often we go and look at what's called a stock table, and that is a listing of all the key information that's happening real time. So here's a company called Computer Programs and Systems Incorporated. It has a stock ticker, CPSI. You could Google that and you would get this current information. Notice this was accessed September 4, 2015. This is the real-time price, what the stock is currently worth. In this case, it's what it was worth at 10:37 a.m., and it's up 11% from the previous day's close. In other words, the value of the stock at the end when the market closed that day. This was the value of the stock when it opened on this particular day. This bid is what people are willing to buy the stock for, and this ask is what people are willing to sell the stock for. And these times 100 is the number of the shares that are available to buy or sell at that particular value. This 1-year target estimate is what analysts believe the stock will be worth in a year. This beta is quite an interesting little thing. It refers to the volatility of the stock market, which means volatility is like how much change is there going to be in the price. So beta, if it's close to 1, then the stock is stable, is similar to the rest of the market. Lower numbers, like this is a number less than 1, means this price is going to be more stable than the fluctuations of the stock market. And numbers above 1 and further away are going to be more volatile. In other words, the price could change. It's not very stable. So the days range, these are the highs and the lows for that particular day. And this 52-week range is a year's worth of highs and lows. So this was the lowest value it was, and this was the highest value of the stock within that 52-week range. The volume is the number of stocks that are being traded currently, so in this particular day. And the average volume is, and note the 3M. So for the past 3 months, on average, this was how many stocks were traded. How they got this number is they added up the volume from all 3 months and divided by 3. And this is how many, on average, shares were traded. This market cap is actually a little formula. It's the number of outstanding shares, so the number of shares that were sold, times the current price, giving us a value of the company. This PE ratio we'll talk a little bit later, and this EPS we'll talk about a little bit later. And this dividend in yield, this means the company pays $2.56 dividend, and that is 5.64% of the value of the stock. So let's go look at this exact company in Google right now and see what's happening. As you may have, if you're watching the markets at all, you'll note that they are going crazy and dropping like crazy. Okay, so this stock ticker symbol was CPSI. So I just typed that in. I went to Yahoo Finance. Look at this. Today, this stock is worth $18.73. Back in September 4, 2015, it was worth $45.49. So if you bought it back then and you own it now, you lost $30, a little under $30 per share. That's awful.